Guys, last week was a very, very volatile week with individual stocks and the market in general. Here is what happened. Mo, why don't you go over what happened? And guys, just a reminder here, I'm very active on Twitter, the Twitter machine or the Zeet machine, whatever you want to call it. So follow me there. I get very active in terms of talking about the markets and talking what's going on during the day. Last week, I put a poll out when the market started out. The market started out that one day up, like the NASDAQ was like 1.7% and it finished down that day. And I put the poll out, said a stock's going to go up forever. And people were like, yes, of course.
We had a lot of big swings last week. Well, last week was the first week of earnings, really. So the banks went, and then last week was the real week of big companies going, big tech starting.
Awesome. All right, so why don't you go over some things, Mo?
So look at some of these swings that happened. These are individual stocks. Teladoc, last week, it was up 24%.
In 1 week?
In 1 week.
Okay.
Boeing here, let's see.
By the way, the peak was 33% on Teladoc.
Mm-hmm. Boeing here, in the last 5 days, up over 13%.
What's Boeing at now, Mo?
Yeah, check that one out.
Let's look at Boeing.
Tilray in the last week, up 40%. Let's go Meta. Meta was up 12.5%. Of course, they reported their earnings. Ford fell. Now, Ford fell 2.2%. That was an interesting one because I just bought a Ford truck this weekend.
Yes, you did.
And the demand for... Ford said that the demand for the Lightning, which is their electric truck, was not being affected. But they're still cutting prices significantly. And I went to 2 dealerships, asked both sales managers, and they said, we have, quote-unquote, virtually zero demand for the Lightning truck.
Isn't that incredible, Mo?
It's incredible. It really is. Spotify here, it fell 18%, 18.25%. Snapchat, this was big last week. It fell 22%.
So Snapchat's an interesting one, Mo. You know why? Because I look at Snapchat going, how is Snapchat still a company?
I don't know.
And I think if you look at and the other thing that's interesting about Snapchat, so I saw somebody on Twitter put this. Look at their annual shares outstanding. Look at this. Back in 2015, they had 1 billion shares outstanding. Now they have 1.6
Yikes.
billion shares. They diluted their investors by 60%, and they're still losing money hand over fist every single year.
What does their revenue look like?
Good question. I think their revenue is still growing.
Is it?
Let's see. Income statement, annual. Yeah. I mean, look at, barely now.
Okay.
So these are the full year, but it jumped up big time, obviously, during COVID. Mm-hmm. But they still can't make money. But it's been a good financial business for the founders.
That's true.
I mean, that's the thing. It's
true.
Man, guys, you guys got to remember, and I talked about this on Blue in the Face. When companies need to grow and they're diluting investors, they're hurting you as an investor. They're issuing more shares that are expensive, and they're decreasing the ownership of which you have in the business. I look at Snapchat and say, these founders and these people running the company care about one thing and one thing only, themselves. Mm-hmm. That's it. Mm-hmm. Even if this company was profitable, I'd be like, their actions don't tell me they care about their investors.
Right.
All right, keep going, Mo.
So Chipotle.
Chipotle.
We did a video of this and we put it on Twitter. It was down 11% at one point, finished the week down 9%.
And now Chipotle is at 1943.
Okay, so it's climbing a little
In
more.
the last 1 month, it's down 9% since the beginning of July.
All right. Southwest Airlines. I'm surprised you didn't talk more about this one.
Well, I want to do a video about it, but it wasn't a big topic, but it did fall 9% in one day.
Yeah, so it was down at its peak, 12.5%. It finished the week down about 10%. So,
and in full disclosure, guys, I own Southwest stock. Doesn't mean you should own the stock. Do your own research because you have your own goals and your own analysis. I have my own goals and my own analysis. But just to give you an example about why you should be following us on this channel, I was so excited the day Southwest fell. I'm like, let's go. Let's keep going. So I was a big fan of this, and I look at the company. Let's look at year to date. It's only up 4.8%. And the last year, it's still down 11%. And I use the drops that when they fall into a price range that makes sense to me, drops are an opportunity to buy more shares. Keep going, Mo.
Last one that I have here, Crocs. Down 20% at its peak. Finished the week down 14%.
Oh, no.
I will say this. Crocs is one of those volatile companies I've ever seen. They are always...
Are they really?
They really are.
Let's look up Crocs.
And not only that, they're always in the news for volatility.
Oh, my gosh. Look at this.
Up, down, up, down.
So look at this. They hit a peak in November of 2021 of $184. Hit a low in June of 2022, just 7 months later, at $47. So from 184 to 47, and now they're back up to 106. Do they make, oh wow, that's a low PE. Let's look at their income statement here.
We have had a lot of people in the Everything Money community talk about Crocs before. So I do find it funny that everybody makes fun of Crocs, but now Balenciaga and Adidas, everybody's on the Croc train.
So look at this revenue growth. I mean, it's actually declining for quite a while, and then it just surged.
Yeah.
Why did it surge, Mo?
I don't know. People got lazy and wanted to wear Crocs to parties.
I'm going to tell you guys something right now.
Inside joke. Nailed
If
it.
you ever find me in public wearing a pair of Crocs, I will give you $10,000.
If you ever find me in public wearing a pair of Crocs, that's normal attire.
Yes. Mo is a hillbilly.
I have camo Crocs.
He has camo Crocs.
Camo Duck Dynasty Crocs. You know what's funny? I was walking through the Atlanta airport the other day and I saw Willie Robertson.
Who's Willie Robertson?
Duck Dynasty.
Oh,
founder.
I don't pay attention to that.
And I didn't bother.
Did you
him.
have your Crocs?
No, I didn't. That would have been great.
That would have been great. Did anybody else notice them?
No.
Really?
Nobody else noticed
But
them.
they're very unique looking
Very
people.
unique. I looked, I'm like, that's Willie Robertson. But I didn't bother him.
What did Nicole say?
She was like, that is Willie Robertson.
Oh, so she knew who he was?
He probably would have.
That came up in conversation again this weekend, by the way. We got into the Mo, Lisa, Nicole, and I were in Chicago once, and we saw Marcus Lemonis from the Prophet, and I didn't want to say hi, but Lisa
embarrassing.
flagged him down. And he took a picture with us, very nice. And we went to another room, all of us to shop. And he came into that room. And of course, Lisa and Nicole thought that he wanted to be friends with us. And I'm like, guys, he wanted to have zero. In fact, I think the second Lisa started asking me another question, he was like, I regret this immensely.
Yeah.
And he started to walk away.
So the next day we see Joe Mauer, who's going to be in the Hall of Fame for Major League Baseball. And I basically ran the other direction. Then told them when we got on the elevator to go upstairs so they couldn't go back and say hi.
Well, you actually kind of flagged me down.
You, privately.
Yes, because I was like, I saw the guy, and I'm not a baseball fan like Mo is. I'm like, man, that's a really, really tall dude. Like, he looks familiar, but I thought basketball. But I remember seeing his bag, like you said,
Yeah,
looked like a
Nike
bag.
bag.
But I just thought it was like a travel bag. So I was like, oh, that guy looks. And so I kept going, and then Mo comes running. He's like, Paul, Joe Mauer's over there. I was like, sick. Yes, also would have wanted to hang out with us. So, what other stocks? Anything else?
No, those are all the stocks. Those are the biggest falls of the week.
Yeah,
Falls and climbs.
guys, the volatility in general on the market. Let's look at SP. Let's look at QQQ, because QQQ in the last week was up 2%. The last month, 3.9. But literally, the biggest wow to me was the day that QQQ, the Nasdaq, was up 1.7% within the first 20 minutes and finished down 0.5%. Those are really interesting moves to me. Now, what it caused them, I don't know. I really have no idea. But I look at that thinking to myself, are people profit taking? And if they are, what does that mean about the... I don't know. I just look at this thing thinking to myself like, geez, oh look at Roku today.
Yeah, Roku was another one last week. It went from $68, and now it hit a high today of $90.50.
$96.55 today.
Sorry, 96. Yeah,
Wow.
intraday high, 96.55.
And we're doing a video
Yep,
on
we're gonna do
Roku. So make sure you subscribe to the channel, figure that out. Guys,
Neo was another one. Let's see what Neo did.
oh, what did Neo do?
So last week,
Oh my gosh. Look at that chart for Neo.
so they hit an intraday low here of $10.84. Today, they hit an intraday high of $15.37.
Just a straight up march.
And there is no earnings reported in that time.
They're up 50% in 1 month, 57% in 1 month. They're up 50%, almost 50% from their low of last week of 1084.
It's crazy.
Guys, remember, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. That's a very, very famous quote by every great value investor. What that means is, in the short run, stocks can go up and down based on popularity and based on sentiment. If people don't like something, the stock's going to fall. If people like it, the stock's going to go up. And a lot of times, most times, there is validity to those things. However, when you get into these extremes of valuation, that's where I sit there and question that. Like, literally, when you look at a company like NVIDIA, why is it up so much this year? Because of AI? Well, yeah, but what does that to justify in order to justify today's price? What does it have to do in the future to justify today's price and give you a return on top of that? right? So it could justify $400 a share in 10 or 15 years, but if you pay that today, you're going to wait. Because in the long run, stocks are a weighing machine. It means the fundamentals and the business is what's going to matter. If you pay a reasonable price for the company today, based on their growth potential for the future, then as their business gets better, you will make money along the way. But if you pay too much, you can go decades without seeing a return, as we've seen from back in 2000 with Cisco, Intel, Micron, all these other major companies. These major companies went decades without seeing any return and fell big time. Even the companies, if you have selection bias and you pick the companies that killed it in the last 20 some years, like Amazon, you still had to endure a 96% fall back in the dot-com crash on Amazon. And trust me, guys, when I say this, it's hard for anybody, I don't care who you are, to endure a 96% fall and say, I still believe in this company. I don't care who you are. That'd be a hard thing for me to do. I would just be like, at some point, like, I'm just wrong. I got to get out of this thing. I'm just wrong. But I probably wouldn't have bought Amazon in the first place if it existed today. So guys, if you watched our videos, you see our software. We have all of these amazing tools, the retirement calculator, the stock analyzer tool, which allows you to make your assumptions about the future, and it gives you the price to pay based on those assumptions. And also used over 2 million times since we started this thing. Analyst estimates we have 8-pillar search. You can put your entire portfolio into an 8-pillar portfolio and see how it looks. Real estate calculator coming very soon. And if you sign up now, that's included in your software forever. Because if you wait, real estate calculator will be its own separate buy-in. You have to pay extra in the future. And our pillar screener, plus the community of investors that you can talk to, thousands of people there active every single day. And we're actually going to start bringing some ambassadors, community members to really engage in the conversation. Guys, this is the last day. $10 off. Our price is usually $39 a month. Today is the last day to get it for $29 a month. $10 off. Go to everythingmoney.com right now. Sign up. It's the last day of this discount. Trust me when I say, if you don't think $1 a day is worth it for you to have 10,000 companies and all these tools on your phone and your computer, I don't know how serious you are about investing. And I really do mean that. I'm not just saying that. What do you think, Mo?
I agree with that.
It's just unbelievable, all the software. And this is the software that I use every single day.
Invest in yourself.
Invest in yourself. Thanks very much, guys. I appreciate it.